on, everybody? This is Bull Run Crypto, and today we're going to talk about how to manage expectations in the cryptocurrency market, give you cryptocurrency market investment strategies, and how to remain calm when the market goes bearish or turns sour, how to manage all of that. Let's get into it. So I'm just going to go straight to the guide here on ChatGPT and use these notes, but I'm also going to give you further insight upon the notes. So if you ask ChatGPT best investment strategy for crypto, you can see they talk about diversification and long-term holding, also known as HODL. HODL is just another word for saying hold, but it was spelled wrong and it became a meme. So diversify your portfolio. Spread your investment across well-established assets like Bitcoin and Ethereum. So what this basically means is invest in Bitcoin, keep it simple. But if you do choose to invest in other coins, go into the coin market cap and maybe don't go outside of the top 20 with your investments. Some would even say don't go outside of, say, the top 15, okay? So right here, the top 15, these are the strongest options. These being a little bit more risky, this being a lot safer. Bitcoin and ETH, I would say, have been more stable, but Bitcoin in particular. So don't get too risk averse. Don't get too risky, okay? Don't risk a lot of your money. Put most of it into Bitcoin if you really want to play it safe. Now, what most people do is they will do about 80% into the strong, high cap, high coins, low volatility, but strong investments. And then they'll take 20% and they'll say, okay, I'll let it ride. And that's when they'll go into some of the meme coins. But from what we've seen in this last cycle, some people have hit it big on those lotto tickets with meme coins, and other people have just gotten absolutely nothing out of it. So every time there's a big winner, someone's got to be a big loser, just like the lottery, right? So take that into consideration. Also, if you wanted to have a really secure outlook, take a long-term perspective. You know, you have a short-term perspective, which might say, okay, 1 year, or you might say within the next 5 years. So if you buy Bitcoin now, you're going to see a lot of volatility in between here at $95,000 all the way up to, say, wherever it's headed next. Some say it's going to $1 million. Some say it's going to 500,000. Some people say it's going even higher than that in the next 5 years. We don't really know exactly, but if you take a long-term perspective, you're not going to be as moved by the short-term volatility. For example, if we just look at Bitcoin over the last 5 years, if I bought Bitcoin back 5 years ago, so that would have put me around, what, 2020, 2019 thereabouts, depending on the time frame. But you could see the price was around $9,000. But you can see Bitcoin went way up to 46, a lot of euphoria, and then it came crashing down to 16,000. So you could see there's been a lot of volatility. So if you took a long-term perspective and you said, I'm buying this with a 5-year perspective, you're not going to be as moved by these up, down, up, down. Some would call them crocodile teeth, right? So take a long-term perspective. I would suggest if you're going to invest in Bitcoin in particular, take a 5-year perspective. Now with altcoins, I would say take a short-term perspective, a 1-year perspective, and even less in some of those because they'll pump and then they'll dump really quickly. Some of them will hold value like, say, Chainlink, but when we go into a bear market, the coins that really hold the value are going to be in Bitcoin. And at the end of the day, this is the golden goose. This is the one you really want to be in. If you invest in altcoins, there is some potential for you to get a lot of gains out of it, but usually once you get a 5x or a 10x, people say just put it into Bitcoin, store the value into Bitcoin. So Bitcoin functions as a store of value. One of the best ways to handle all of the volatility is dollar cost averaging. So what you can do every month, no matter the price, you can put $100 into Bitcoin, and $100 right out of your paycheck goes right into Bitcoin, whether it's 95,000 or 65,000 or 120,000. You're just dollar cost averaging. You could also make that $1,000. I don't know what your income level is, but that's what people do. Remember, this is not professional financial advice, but most commonly, people who invest in crypto that I've seen be successful over a 5 to 10 year period do dollar cost averaging, and it's worked out for them so far. And that's just based on what the charts will show you. 10 years ago, for example, with Bitcoin, I mean, if you look at the price of Bitcoin 10 years ago, that would put us around 2015, $244. So it's done nothing but appreciate, okay? So very important that you take that long-term perspective if you're going to dollar cost average and not worry about the fluctuations in price. Active management, and research. So always do your own research. Watching a video like this gives you insight, but don't just lean on one video or one influencer or one YouTuber or one person. You want a consensus. You want to do your own research. You want to think critically inside your own mind. So before investing, research projects thoroughly. Look into the team, technology, tokenomics, and market use case. This is where you get a lot of scammers. We've seen scammers, scam coins, they don't even like to show their face. Or they use aliases or alternative identities or memes for their face. So watch out for all of that, of course, but also pay attention to who their investors are. FTX, we saw the founder, we knew Sam Bankman-Fried, all of this, they had big backing, and they still rugged everybody, or they still collapsed. So even in all those cases, you can still have these anomaly situations where they pull out from underneath you. Strong cases would be Coinbase, Binance. They seem to have weathered many storms and that have been thrown at them. Stay informed. Follow reputable news sources. Join crypto communities. Watch out for the crypto communities that you join, though, because on Telegram and Discord, I've noticed that those are just manipulations or pump and dump groups, and you have to really watch those. Not saying they're all bad, but you have to pay attention to if you see too much BSing going on. Consider active trading. For more experienced investor, strategies like swing trading or technical analysis can be used to take advantage of short-term market moves. I would say this is definitely something for people who have been trading or investing for over a couple years. I would not recommend trading crypto at all for anyone who's been in the market for less than 2 years. And even then, beyond that, it's still high risk, okay? So make sure you have risk management. Don't put all your eggs in one basket, meaning don't just bring over all your resources and, all your money, sell your house and all that and come into crypto because that can be risky. We've seen people who've done that, who've sold their house and they went all in on Bitcoin, but that worked out for them. I'm just saying that's not for everybody. That's a very high risk, not very risk tolerant, right? So only invest money you can afford to lose and consider how crypto fits into your overall investment portfolio. A lot of times people say 10% of their net worth is put into Bitcoin and crypto. I've even heard some people say over 50%. In my case, I am over 50% of my net worth is into Bitcoin and crypto, but I'm not recommending that to everybody. I got in a lot earlier, so my value has increased to where it did become that. But when I first got into cryptocurrency, it was a lot less than what it is now, than 50% of my net worth. Use stop losses and set limits. I don't use this, but some people who like to trade crypto, they have used stop losses and they do set limits. You can get stopped out of a position. For example, if you've got Bitcoin at 92,000 and then it sells because Bitcoin just touched 91,999 or something like that, and then it shoots back up to 95, now you're stopped out of Bitcoin and you just lost $3,000 in value towards Bitcoin. You got to jump back into Bitcoin because you're worried it's going to go back up. So stop losses, they can be useful if Bitcoin's really dumping, but at this level right here, I wouldn't want to have a stop loss on Bitcoin. Someone might set 89,000 and then the next thing you know, it goes to 88 and then shoots back up because it recoils very quickly. You can see it'll go up and then come down and then shoot back up. So you have to watch out for stop losses, but that's something that you can consider. Regularly rebalance your portfolio. Periodically review and adjust your portfolio allocation. Maintain your desired risk level. In some cases, consolidate your altcoin losses, your meme coin losses, put them back into Solana, put them back into Ethereum, and then recalibrate and go at it again. You don't necessarily want to hold on to all your coins and ride them to zero. This idea that you want to ride meme coins to zero is not a good one. People have this mentality with Bitcoin where they want to ride it to zero if they need to be, but I would say that with meme coins and other altcoins, if you see they're dumping fast and hard, sometimes it's better to just recalibrate and get out of that position before it goes even further down. And I've seen this many times in the 10 years plus that I've been doing crypto. Consider passive options, crypto index funds like the BlackRock, iShares. You can get into that. Some investors opt for diversified crypto funds or index tracking products. You can invest in Coinbase or MicroStrategy on the side. Stuff like that can help give you extra exposure to the market without as much risk or volatility in some cases. Although if you bought the Coinbase stock when it first came out. It's been down ever since then. It hasn't revisited its price when it originally IPO'd. MicroStrategy's gone up significantly. BlackRock's kind of run sideways for the last couple months anyway, and that's a new ETF, but they were up in the beginning. ETH, the same thing, and we've got a few more ETFs coming. But final thoughts, the best strategy, they say, is buy and hold. Again, taking that long-term perspective in a top-tier coin, typically like Bitcoin has been over time, historically, the safest way to approach this. If you're going into Ethereum or anything below that outside of the top 10, definitely a higher risk. But Bitcoin seems to be the store of value that people recommend with a long-term perspective. But it's not as aggressive of a strategy as you would get with something in Ethereum DeFi or in Solana's ecosystem or maybe Sui or Binance chain. So take all that into consideration. But again, taking that long-term perspective, dollar cost averaging has been overall the best strategy so far that I've seen. Not professional financial advice. Obviously, we don't know where these markets are going, but we have a lot of confidence being built with the ETFs, BlackRock getting involved, Trump getting involved, and the government getting involved to really kind of stabilize the market. Let's see what ends up happening, but let me know what you guys think. See you on the next one.